Hello and welcome to Baatchit with Cafemutual. I'm Sohail Chagla and today we are joined by Harsh Roongta, author and the founder of Fee Only Investment Advisors. So, welcome to the show, Harsh.
Thank you, Suhail.
It's good to meet you, sir.
Good to.
And how are you liking your time over at Passive's conference?
So it's a superb event, and I've been now coming here from year to year, and I see the kind of growth, and I think it reflects how much interest is there in this subject.
Right. And you mentioned to me that you've been distributing passive funds for about 5 to 6 years. So, what brought you into that, and what made you recommend passive funds to your clients?
So I think it was a concatenation of various circumstances. I think around 2019, we shifted to a fee only model. We became a completely only an RI. So that removed any economic disincentive from looking at assets for our clients. Then COVID happened, and we always, in our practice, we had always looked at goals of clients, their asset allocation, their resource availability. And when COVID happened and equity prices fell, there was a need for rebalancing.
Right.
And I think at that time, if you hark back 5 years, that time the fear psychosis was so high that shifting to equity itself was a challenge.
Right.
And therefore, shifting to a broad-based equity like the Nifty 50 was much easier. And that is how we did a lot of the rebalancing, which fortunately worked out very well for our clients, almost within 6 or 8.
So, it worked out well. And how has the impact on your business been since you introduced passives?
So our practice, of course, has done well. Yeah, I won't say that is only because of passives.
Right.
Passives is just one element, right? Investment is one element of what we do. Uh, in investments, passive is one element. We look at the client's overall goals, their life planning. So I think passives has been an important and a necessary component of the development of our practice.
And if I may ask, how long have you been involved in advisory services?
So the license itself is 2013, just when the investment advisor uh, regulations were notified.
And since then, how has the change been in investor demands for passives, in your view?
So again, I will not restrict. So passive would have taken off only over the last 5 years, even in our practice. Uh, and I think in our case, it is not demand. So we don't cater to client demand for a particular product.
Right.
We will fit a product to the client's needs.
Okay.
So in terms of fitment, it is now working out much more than it used to. So much so that our, the amount of active that we use has reduced very, very significantly.
Really? Okay. And when it comes to shortlisting your passives for your client, you have to choose the perfect one for your client. So, what metrics do you use when it comes to shortlisting these passive funds?
So again, as I said, we don't have products that we will
Right.
sell. We will match clients' needs to products. So
Right.
essentially, there will be two categories of products.
But how do you guide the client? Yes.
So exactly. So for that portion of a client's asset allocation that that needs allocation to assets that will give market return. We earlier used to choose broad-based indexes like Nifty 50 or Nifty 500, or maybe even multi-asset funds that had a mix of, a broad-based index like Nifty 500, S&P 500, gold, and even G6.
Right.
Okay. So those were the kind of assets that we would choose for that portion that looked at market returns. Okay. But those portion of the asset allocation that looked for more than market returns, we used to have factor funds where, the risk adjusted return were higher. We would have, for example, momentum quality 50 or even higher risk where is indicated. We would have a mid cap Momentum 150. That's a very risky fund, but it has a much higher additional return over a Nifty 500.
Okay. And I just wanted to ask you, what is your outlook for the mutual fund industry and specifically passive sphere's place in it over the next 5 to 10 years?
So I think mutual fund industry has a product for everyone. Yes. Okay. So obviously such a love. It's so transparent, so well regulated. Okay. And I mean, everywhere else in the world, the mutual fund industry is larger than the bank deposits industry. And there is no doubt in my mind that it will happen here in India as well. And it should happen in the next 10 years, is what I see.
In the next 10 years.
As far as passives itself is concerned, within the mutual fund industry, today it's at 17%. I'm sure that percentage will rise. And like the rest of the world, it will be equal to active, if not more.
All right, then. So that's all the questions we had for today. I'd like to thank you for being part of our day. And for the viewers, we'll see you next time. Thank you, Mr. Harsh Roongta.
Thank you.